You just booked a flight for a crucial business trip. Everything is going smoothly and you're about to pay. But when you enter your payment details, your card is declined or flagged unexpectedly. You check your balance, everything is fine. You confirm your card details still valid. But no matter how many times you try, the same frustrating message pops up. If you've ever been in this situation, you are not alone. Payment delays, restrictions, and errors are challenges that often seem to disproportionately affect certain regions. While technical issues can sometimes be blamed on system errors, the reality is that deeper. Culturally ingrained biases are at work. These aren't just random glitches. They stem from systemic stereotypes embedded within global payment systems. Stereotypes that unfairly target specific countries, including Nigeria, where the financial system is under heavy scrutiny. In this video, we will explore how these stereotypes shape the global payment landscape, how they impact your transactions, and more importantly, how you can take control and navigate these challenges for smoother cross-border payments. These barriers do not just inconvenience individuals, they have long-term economic consequences, reinforcing financial exclusion and limiting global opportunities for entire regions. Cultural stereotypes are generalized perceptions about a group of people or a country. When these biases influence finance, they create assumptions about the trustworthiness or risk profile of specific nations and their financial systems, often leading to unfair restrictions on payments. For example, multinational banks may hesitate to process payments from users in Nigeria due to persistent misconceptions about fraud risk. In reality, these biases aren't based on actual data, but long-standing generalizations that unfairly penalize legitimate users like you. A clear case of this occurred in December 2022 when the Central Bank of Nigeria warned banks and payment service providers against discriminatory practices. Some institutions were found to be favoring specific card systems over others, leading to legitimate transactions being unnecessarily blocked. This not only disrupts users' financial activities, but also undermines trust in the system. Beyond individual frustrations, these biases have broader economic consequences. A report by Africa Practice and Africa No Filter found that negative media portrayals of Africa inflates perceived investment risk, forcing African nations to pay up to £3.2 billion annually in interest on sovereign debts. This prejudice premium diverts essential funds from critical development projects, perpetuating financial exclusion and slowing economic growth. Unfortunately, these biases also extend to global platforms like Booking.com, making it even harder for users from certain regions to make smooth payments. Addressing these systemic barriers is crucial for ensuring fair financial access and fostering global economic inclusion. Bias in global payments can directly impact your ability to transact smoothly, influencing whether your payments are processed, how long they take, and how much extra you may have to pay in fees. These biases often stem from stereotypes about certain regions, particularly those labeled as high risk by financial institutions and payment platforms. Imagine trying to pay for an international service only to see the message, "This payment method is not supported in your country." This restriction is not just about policy. It is the result of persistent stereotypes. Some platforms assume payment from certain regions are riskier, even when there is no actual evidence. Studies have shown that financial institutions disproportionately flag transactions from Africa due to outdated risk models, not actual fraud rates. This results in legitimate payments being blocked or declined, forcing users to find alternatives, sometimes costly solutions. Payments from certain countries often take longer to process because they are subjected to extra scrutiny based on broad assumptions. Even when using fully compliant payment methods, users from these regions face unnecessary delays and extra verifications. For example, a Nigerian business owner reported waiting days to process payments, while a counterpart in Europe received theirs instantly. Despite both transactions meeting the same security requirements, these delays disrupt business operations and create barriers to financial inclusion. Users from so-called high-risk regions frequently pay higher fees for cross-border transactions due to financial providers assuming increased fraud risk. These barriers inflate costs unfairly. One freelancer from Nigeria noted that the fees for receiving international payments were nearly double compared to someone in the US. Similarly, Visa and MasterCard have justified increased cross-border fees by citing fraud concerns, disproportionately affecting users from developing nations. In 2023, many Booking.com hosts face payout delays, with those in specific countries like Hungary disproportionately affected. While the company contributed this to internal banking issues, the fact that certain regions were impacted more than the other suggests deeper biases in how financial systems prioritize different markets. This pattern reinforces financial exclusion by making it harder for users in these regions to access their earnings on time. When local bank cards impose strict international transaction limits, virtual dollar cards offer a viable solution. For instance, in 2022, several Nigerian banks reduced the monthly international spending limit on Naira debit cards to as low as $20. In response, many users turned to virtual dollar cards provided by fintech companies, enabling them to continue making international purchases without such stringent limitations. Diversifying your payment method can safeguard against unexpected disruptions. For example, if a particular payment platform experiences issues or imposes sudden restrictions, having alternative options like virtual dollar cards, multiple bank accounts, or different e-wallets ensure you can seamlessly continue your transactions. This approach is especially beneficial in regions where financial services can be unpredictable. Global payment processors often update their terms and conditions, which can impact users in certain regions. Regularly reviewing platform policies and updates helps you anticipate and adapt to changes. Ensuring uninterrupted transactions, subscribing to official newsletters, or joining online communities can keep you informed about such changes. Supporting and advocating for financial services that prioritize equal access can help challenge and change existing stereotypes. By choosing inclusive platforms and voicing concerns about unfair restrictions, you contribute to a more equitable financial landscape. Engaging with fintech companies that aim to expand services in undeserved regions can also promote broader systemic changes. In conclusion, cultural stereotypes in global finance create unnecessary obstacles, but recognizing them is the first step to overcoming them. These biases aren't just technical, they shape how payments are processed, who gets easy access to financial services. Understanding this empowers you to take control by adopting reliable solutions, ensuring that your transactions remain seamless despite these challenges. Equip yourself with reliable tools like a trusted virtual card to navigate and overcome these biases confidently.